Hey guys, in this video I'm going to be showing you how to use FinViz to find great companies in 10 minutes or less. So the first thing if you want to be able to find a company in 10 minutes or less is you want to be able to go to Screener. So from here basically I go to FinViz, it's a free website, anyone can use it. Basically you put in anything that you want, any types of screens that you want. So for me personally, I like to put in the USA just because I know the rules and regulations here, so there's nothing that I'm not going to be aware of, hopefully. Market cap, I generally kind of like looking at 2 billion to 10 billion, but you can put anything you want. If you like dividends, if you like, if you're a part of the GameStop community and you want the short float to be high, I guess you could screen for that. And also fundamentally, I like something under 30 PE for this example. Current ratio at least wants some liquidity and wants some sales growth of at least 10%. But you can put in anything you want just to fit your investment strategy. And then from there, you see all the companies you want, the tickers, companies, sectors, industries, obviously the country, all USA, price earnings all over under 30. And then, it's kind of, you have to kind of gauge it to be based on, you have to, be honest with yourself. How comfortable are you understanding a lot of business models? If you're fairly newer, I would stay away from, biotech, pharmaceuticals. They can get pretty hard to understand the business model, but if you go over to like footwear and accessories and packaged foods, anyone can generally understand that business model. So I don't think that should be too hard. So for example, we'll use, I'd look at Essential Garden and Pet Company. They fit the requirements that I wanted to put in. So okay, I'll look at it a little more. So for here, I go to Capital IQ. You can go to, Yahoo Finance is free, or any other, financial website where you can, look at their financials and stuff. Or you can just go to their investor relations page if you want, but I'll take a little more time. So, going to their income statement, I can see, the revenue's growing. That's great. This is just a quick glance. The overall idea is if I think the financials are healthy, I think the valuation's fair, I'm going to spend more time looking into the investor relations page and figuring out a lot of my questions. So I'm just looking quickly, revenue's growing. Net income's growing, EPS should be growing. I don't know where the shares outstanding go to for EPS, but, if it's assuming that they're staying the same, EPS should be growing, which is great. Looking at current ratio again, 441 million to about 1.5 billion. I'm going to look at, I don't really like looking at inventory. I don't think that's a good way that management should pay off their current liabilities to sell inventory, because you're going to need to do that at a discount, and I just don't think that's a healthy thing. So I just look at anything other than that, really. So if counting up their accounts receivable and the cash and equivalents, 930 million, about 960, we'll say 973, 975, we'll say in current assets around that range. Current liabilities, yes, we have over two times the current ratio, which is great. The long-term debt isn't insane, especially for a company that can almost pay it off right now if they wanted to. Looking at cash flow, they're generating free cash flow. For most of the years, they are generating free cash flow. You can look into the rest of the statement of cash flows to see exactly how management is operating the company and what they're kind of spending on. If there's acquisitions, capex, short-term debt, long-term debt being issued, repaid, I don't know. But you can just generally glance at this quickly, and then I look at quick comps. This Cap IQ doesn't do the best job at giving fair comparables, but just looking at EV to revenue of 1, forward priced earnings of about 23. That's it's a fair it's fair. So just generally looking at this, looking at the financials. The financials are healthy, balance sheet is strong, they're generating free cash flow, and you can look at the rest of the free cash flow quickly on a glance if you want to. It's just for this video, I'm just not going to go too in depth, but you're looking at stuff quickly, and I see, okay, the financials are healthy, it looks fairly valued. At a comparables method, I'm going to look at, ratios. Is the gross margin increasing or not? Is, return on assets, capital, return on equity, is it increasing? Those are all good indicators. Again, so there's our quick ratio of about 2 right there. Your revenue growth, you just look at all these ratios. So if things are growing respectively to where you want what the ratio would want to grow at, that's It's all healthy. And then from there, I'm going to look at their investor relations page now, and I'm going to figure out, so why is it growing at double digits? Do they have any strategic partners? Are they growing organically, or is it through them acquiring new companies and, their revenues are just being added on? So there's so many questions I would want to have myself figure out to be answered. And then, but yeah, basically this is just an idea of like, is it worth my time to look at the investor relations page and their presentations and 10K annual report and quarterly report and stuff like that. So yeah, that's like 10 minutes or less than 10 minutes on, how to find companies that could be, worth your time for your specific strategies of investing. So I hope you guys enjoyed that. If you did, make sure to subscribe and hit a like below. I would really appreciate that. All right, I'll see you guys in the next video. See ya.